commitments, she's going to be unable to do it. So you'll have a couple of different options for electing a chair. You can, probably want to wait until next week when there are more people available, because there's quite a few who said that they couldn't make it to this meeting, but they are going to come for the remainder of the budget committee meetings. A lot of the people who have been here for they're serving the third year of their 3-year term, just didn't want to come to the organization meeting because I kind of give the same spiel every year. So it's really up to you what you want to do, but that's an option. If everybody'd like to do it tonight, they can. If they'd like to wait until next week, we can do that as well. So my apologies, the cord doesn't quite reach, so I'm going to have to sit a little bit a ways to go through this.
Should we put a new cord in the budget for the...
Noted. All right, so welcome everyone. My name is Audra Kaler-Bell. I'm the town manager, so we'll just go around and do introductions so everybody in the room can hear everybody else's name.
I'm Jody Hanson, the finance director.
I'm Lisa Dresser. I'm a broker at Kate's Real Estate and live up on the north end of town.
I'm Lorna Cummings. I live on Pearl Street, and I've got a couple of kids that just started college and lived here for a while.
Mary Winchell, retired librarian.
Beth Doan, live over on Thomas Street.
Judy Shelby, I live over on Erie Avenue, retired teacher, Camden Hills.
Shannon Herring, I'm a publication designer and I live on William Glenn Drive.
Kristen Sidwell, I work at Cedar Works. I live up on Alden Street.
Wendy Rich, I live on Pearl Street. Physical therapist. I work in SAD 40 School District.
Courtney Seaforth, I'm currently a waitress over at Long Green, soon to be co-business owner over at the new registering place in the old Long Green space. And I live on Glenfield Circle.
Sophia Romana, I live on Chestnut Hill and I'm an international consultant and I have a small business of making dog biscuits here in Camden.
Mark Haskell, I live up on Pearl Street. I'm a retired photographer.
John French, John Street, and I run a mechanic shop.
Jim Hurd, I live on Harrison Avenue. I'm retired, and I'm also AKA vacancy on your list.
I'm Drew Lyman, run Lyman Morse Boat Building.
Mark Ratner, Camden Select Board.
Bob Valchani, Camden Select Board, and I live in this town hall.
Janice? I'm Janice. This is the audience assistant.
Great. So what's the consensus tonight? Would you like to move forward with electing a new chair for the budget committee, or would you like to wait until next week?
Just wait.
Yeah, you should wait.
Okay, great. All right, so we'll kind of skip through the rules of order and procedures as well, because that's kind of something I think it would be better to talk with as a bigger group. So I guess just to move on with the beginning of the meeting. So really, I guess some of the broader roles and responsibilities for the budget committee, what you do is you review the budget that I present as the town manager, and then based on the questions that you ask of me and town staff, you make your own recommendation that goes to the select board. And the select board then takes the feedback that they've received from the budget committee, they look at the budget that I presented, and they make the final recommendation that goes on the warrant for town meeting. And then town meeting is where the final vote on the budget is held. So really, as a budget committee member, it's really important that, you read everything that you get. If you have questions prior to coming into a meeting that you think it would be helpful to speak with myself or Jody or one of the other staff members, feel more than free to reach out to us. We're more than happy to answer your questions so you feel prepared for meetings. Also, typically this committee goes by Robert's Rules of Order, not incredibly strictly, but enough so that there's some structure around how the meetings run and how votes are taken on specific budget categories so that we're able to move forward with decisions and discussion. So this is really good, I think, for a lot of people who haven't been through the municipal budget deliberation process. Really, the budget committee, it's such a large group and it's so important. We spend so much time on it every year because it's really foundational for everything that the town does for the year ahead. So it really sets kind of the policy agenda for the year. And it makes clear for the year ahead what services are going to be provided, what projects we're going to work on, how it's going to be funded, and every single thing that's in a budget affects all the citizens in the town. So it's a really important job, and we really appreciate you being willing to look through the budget and provide feedback and recommendations and look into it, because what you're doing really sets what we're able to do as a municipality for the year ahead. So, you know, a budget has a lot of different purposes, especially a municipal budget. So, you know, it's an accounting document. It's how we, you know, control our expenditures and record what we're spending. It's a management document. It's how we are able to make decisions and determine how much could be spent and who can spend what. It helps with decision-making purposes. So, you know, it's the framework by which we have to use to make all decisions in the year ahead. And also it helps communicate how we're spending money to citizens in the town. So it really serves a lot of different functions, and it's really important for those reasons. So Camden uses a line item budget, and it's very common for, you know, municipal budgets. You know, it sort of gives you a lot of oversight and control and specificity as far as, you know, the different line items that are listed and how much is allocated to each line item. But there isn't a lot of flexibility within that, so you're pretty, you know, locked into that. There's some degree of flexibility because, you know, really at the end of the year we're looking at more of the sort of major categories and not going above or beyond that. But it's pretty specific in what you can spend for what purpose. And this is what you're going to see as you go through. So it's, you know, the account, the description of what it's for, and then, you know, the amount allocated. We give actuals and the budgeted amount from prior financial years to give you an idea of what the variance is. And you'll see the recommendation from the department head from this financial year, as well as my recommendation that's being presented to you. So when you're going through your budget books and looking at everything, there's a bunch of different sections. So we'll go through what they all mean, but this is sort of the outline of what they are. So the budget message, that's sort of the first thing that you'll have in your packet, and that's the letter that I've done. And it really is just sort of the high level, you know, these are our goals for the year. This is what we're trying to achieve. And I've talked about, you know, in the different areas, what are the significant changes from last financial year to this financial year, and what are the reasons for those changes. So it just gives you some sort of narrative on what it is that we're trying to do, so that the numbers have some sort of context behind them. So the net commitment, this is sort of just the summary sheet, and it gives you, you know, sort of the net amount that is being proposed for spending. So you get the total amount of expenditures, and then the total amount of revenues subtracted. Added to that is the assessment that we get from Midcoast Solid Waste Corporation, and then our appropriations for county and school taxes as well. And that sort of comes up with the bottom line figure of exactly how much needs to be raised by property taxes. So the budget summary, it shows the overall percentage difference between, you know, this current financial year that we're discussing, or the financial year that we're discussing, which is FY21, as well as the current year that we're in. So it'll be expenses, revenues, and then the assessment from Midcoast Solid Waste. And the revenue sheet, this will be something that we kind of bounce back and forth between a lot, because there'll be some expenditures that are offset by revenues, or some departments that bring in revenues. And I think a good example of that is the harbor department. So that's one department. It brings in pretty significant revenue. So it's just good to understand that there are some additional revenue that isn't property tax based that we'll be looking at. And that'll be very important as well for capital projects, because there's some level of offsetting that goes on when it comes to the capital projects and how we fund those. So the general fund, now this is sort of, you know, where all of the day-to-day operations are budgeted for. So this is where you'll find all the different department budgets and the payroll in each, benefits, and then the different lines for different items like office supplies, fuel, different equipment. The capital improvement area of the budget, this is where major purchases and projects are planned and budgeted for. So it's typically anything over $10,000, but, you know, there is some variability in that. Sometimes there'll be certain items that are, you know, of that amount that can end up in the general fund, but more often than not, the bigger expenses will be in the capital improvements area. So, you know, it's for both equipment as well as projects. So you'll see things like this year, there's going to be a new plow truck that's proposed, so that'll be in the capital improvements budget. But also things like, you know, if we're going to do major improvements or building of a road, or we're going to, you know, do an overhaul of a park or something like that, that would be in the capital improvement section. So we also have capital reserves. Now this is for, you know, accounts where we want to set aside funds for a bunch of different purposes. So it could be for, you know, planned major project in the future that we want to make sure that we have some funds set aside to pay for. So it, you know, it could be something like, you know, we know that we're going to do a big road improvement project within, you know, a 10-year period. So we want to put aside, you know, like a sum every year so that when it comes to pay for that project, we can use some of these funds. It could be for incremental improvements. So, you know, every year we put a little bit of money aside for storm drain improvements so that when there's an opportunity to make an improvement, we've got this fund available where we can draw this money from. Or it could be for, you know, some sort of emergency purchases, like, or emergency purposes. And we have a winter maintenance reserve, and that's a good example of, you know, we could have a really bad winter when the normal operational budget has been depleted, and instead of, you know, having to go back and raise funds from other places, we've got this reserve that we can draw funds from. So those are kind of the reasons why you'd have reserve funds. Another really important area is debt service, and this is something that, you know, it's really important to pay attention to in the context of greater capital planning. So this is where, you know, we're paying off bonds or loans or financing for projects that we've done in the past. So a good example, the demolition of the tannery that was done years ago, you'll see a line for the debt service payments for that. So the principal is split up from the interest. You know, the building of the public safety building down the hill, that's all debt service. So this is really important because, and I'll talk about this a lot as we go through the budget, when you're trying to plan and stabilize the impact on taxpayers, you really want to be careful that you're sort of planning major projects and borrowing when you're seeing borrowing from prior projects falling off. And that's something I'm going to talk about because we've got sort of a plan looking forward to the next years ahead, particularly FY23 and then FY25, and we have some big debt falling off from both the public safety building as well as the, I think it was the wastewater treatment plant upgrades that were done. And when that debt falls off, we're going to have the opportunity to do some major capital projects. And you know, this year, I'm really hoping that we can start looking ahead to that and planning to be prepared for when that happens. So that's a really important component of the budget, and really the debt, the capital improvements in the capital reserves, I see that as a really important role for the budget committee to weigh in on that, because you have a good perspective on what's important to you in the town, you know, what you think are priorities, and that really helps us kind of plan for the future better. So your input into this section of the budget is really helpful. We do have a couple of special revenue funds that sit outside of the general fund. So that's the wastewater department and the snow bowl. And the idea with special revenue funds is that their revenues must meet or exceed their expenses. And the budget committee does review these two special revenue funds, but doesn't really make a formal recommendation to the select board or the wastewater commissioners. But you know, you do have the opportunity to review them and provide input. And I think it's always good to have a bit of an understanding of how, you know, the budget impacts taxes. So, you know, if you look at how we calculate the tax rate or the mill rate, that top number, that 19 million, that's what needed to be raised in taxes to cover town expenditures as well as the schools and the county tax assessment and Midco Solid Waste. So if you take that total number of all of the different functions that, taxes fund, and that gets divided by the total valuation of the town, that's how you come up with the tax rate. And to kind of put that in context a little bit more, say, you're reviewing the budget and you're really conscious of spending and you want to, reduce the mill rate by 1 cent. That would be about, given our current valuation, $13,200 worth of expenses. Or on the opposite side of that, you'd have to look at increasing the revenue side of the budget by the same amount. So if, it's the same if you want to look for, an even bigger, sort of decrease in the tax rate by 10 cents, you're looking at about $132,000 worth of expenses. On down to, reducing the mill rate by $1, that's about a $1.32 million reduction in expenses or increase in revenue. And on the, the valuation side of it, that's kind of, how much value we would need to pick up to have an impact on the tax rate. So it all fits together. All right, so this is just to, give everybody an overview of what the timeline is, and the different departments will be reviewing on the different nights. And there's some flexibility in this. I think that if we're, going quicker, we could do more. If we're going slower, we could end up doing less. But this is generally what the schedule is going to look like moving forward. All right, so the next part, I just want to kind of give you sort of an overview of some of the major points. And a lot of this is in the budget message, but I think it's kind of good to, get it out the first night. If you have any questions, I'm happy to answer them. And of course, we'll be talking about this in much more detail over the next month. So, there are always some challenges to every, financial year that you head into. This was a bit of a unique year in that we have an extra pay period. So we have a 53rd pay period just because of the way the calendar worked out for FY21. So as a result, without doing anything else at all differently this year, because of that extra pay period, that's an increase in $58,000 over FY20, which we're currently in. There's also a proposed payroll increase. It would be a 3% COLA for wages for town staff, and that's really kind of tracking the same as the union contract that we have with the police department. They're the only...
Sorry to interrupt you. So I'm new to this, and if you could spell out the acronyms for me, at least for the first time, it would be helpful. I have no idea what COLA means.
No, thank you so much for stopping me there. So COLA is a cost of living adjustment.
Thank you.
Yeah. So the police department, they're the only unionized department within town, so we have to negotiate a contract with them every year that it spells out pay increases, differences to benefits, that sort of thing. And typically, if the police department is having any sort of cost of living adjustment, we try to be consistent with other town staff. Also, there's sort of something that we're working on with the personnel board is a 3-year plan for readjusting all the steps and grades for town employees across departments. So there's a few departments that, jobs have changed to the point where their job descriptions and their current classification, it doesn't really match up, so that needs to be readjusted. There are some other departments, such as Public Works, who will be addressing this year, where what we're seeing in the private sector for comparable jobs is just so far above what we're currently paying that in order to stay competitive, we really need to look at adjusting their wages. So that's one thing we're proposing this year, particularly with the Public Works Department. So there's sort of a 3-year plan, because doing it all in 1 year and adjusting everybody's wages in one budget cycle would just be too expensive and not something that, would be wise to burden taxpayers with. So we're looking at doing it over a 3-year period, focusing first on Public Works and a few other administrative positions where it's really clear that there's a big difference. So because of that, that's another $32,000 increase for this year. Also, something that, I kind of touched on briefly, there's going to be a real need to invest in some major engineering and design work for some road improvement projects, sidewalks, roads, looking at complete streets, storm drainage, that sort of thing, in the anticipation of, some borrowing for when we have debt falling off in FY23 and then in FY25. So it would be, I think, a really good strategy this year to focus on planning for those major projects. So when that debt does retire, we're prepared and we're ready to go, and we have engineering that is going to give us a cost that's more in line with, what we're going to get back for bids when we bid those projects out. Because that's also been a problem, is that the way that the budget cycle works, we'll get an estimated cost for some of these projects, and it's, often a year away from when we're actually able to construct them, because we've got to do sort of, a year of engineering and then bid everything out. And so by the time the actual bids come back, sometimes it's far and above, what was budgeted in the first place. And I'd like to sort of get away from that practice by doing a lot of that work up front. And it's a little bit of a difference, but I think it can help with, a volatile construction market. And also, we do have some time because we are looking at, that debt retiring in the future. And also another challenge, we're going to be utilizing less surplus than we used last year. So that means the overall revenue, looking at this budget compared to last budget, is going to be significantly less. And that's probably what's going to have the most impact on, a difference between this year and FY20.
Can I ask a question?
Mm-hmm.
Couple of them.
Absolutely.
First off, your analysis of the payroll for, like you said, the public works, you take into fact the benefits lines? Because
yes,
the towns traditionally pay better benefits than most individual markets.
Yes.
And so, that needs to be taken into consideration when you're talking about apples to apples.
Yes, absolutely.
And then
it's been a recruiting challenge.
I understand that, but I'm just saying that we have a good benefits package with other things that go along with days off.
Yes.
And all the things that we offer. The surplus, why are we not using 150 out of that? Because last I knew...
We're going to use 450.
Okay, you said you're going to use less surplus.
Well, we used 950 last year.
I missed that one. I thought it was less than that.
No, it's 950.
And my taxes still went up.
A little bit.
A little bit.
A few cents.
Yeah.
More than a few cents.
Try $2,000. Good. Yeah.
Okay. We'll talk.
We'll talk. All right. So solutions. So I guess some of the good news, if you're looking at this budget compared to last, overall spending is decreased by 1%. So, that's kind of helpful going into this year that, we're looking at a reduction in spending. And a lot of that has to do with the fact that we're only proposing to do capital projects that are a necessity for this year. We're going to hold off on any significant investment into these capital projects until that debt is retired, 23, 25, or I said 24, but it's 25. We are going to utilize the town surplus. It's very healthy. It continues to grow. So, I think the best thing that we can do with it is, sort of use that to offset the cost of some of the projects that we're proposing to do, such as that major engineering and design work. Also, we have it says highway TIF, it should say downtown TIF because the highway TIF isn't very lucrative, but we have 2 tax increment financing districts. And what they basically do is they capture value from the date that they were sort of put in place, and any value that grows above and beyond what was in place from that date gets set aside. Any taxable value gets set aside, and it can only be used for specific purposes. So it's kind of money that's set aside that's not really impacting the tax base. So we can use some of our TIF revenues for specific projects, and we have a few little things in the downtown. Harbor Walkway is one of them, as well as continuing to pay for a lease purchase that we have on the Knowlton Street and the Knox Mill parking lots. So that helps because it's not impacting the tax base. Also, we are going to be using money from our reserve funds for specific purposes. And we're also going to continue to invest in town projects with long-term savings. So last year, we funded the majority of the project to purchase all the street lights from CMP and then convert them over to LEDs. So we're going to complete that this year, and I'm asking for a little bit more funding to do that because purchasing the lights from CMP was a little bit more expensive, and then there's some grounding and wiring issues that we need to resolve as well. So, with all those sort of additional costs, that'll help us finalize that project. And we're also going to be looking at performance contracting for a number of town buildings and properties, and that'll help with energy savings over time, and it'll be an upfront investment, but with the operational savings, they'll pay for themselves. So we're going to be looking at, those sorts of initiatives as we move forward. So this just sort of gives you, a visual breakdown of, the different sort of major areas of the budget and, what percentage of each. All right, so to give you an idea of some of the, the drivers behind expenditures, wages overall, if you look at things like the cost of living adjustment, the step and grade plan changes, the 53rd pay period, and, some of the other progressive wage reclassification. All in all, that had about a $411,000 increase that's in the budget. Health insurance, it was about $67,000, and that's just sort of budgeting for a 5% premium increase. We never know exactly how much the premium is going to go up, but that's a pretty safe number to use as an estimate. Also, retirement, there, we have to put that aside, and it's an employer contribution. So professional services, there's a different way that we're going to contract for and deliver legal services this year that's going to be reflected in the budget. So instead of sort of paying our attorney on an hourly basis, which we've done in the past, we've entered into an interlocal agreement with the city of Belfast where the town attorney is technically a Camden employee, and then Belfast reimburses us 66.66 reoccurring of their expenses, so their salary and their benefits. So there's going to be, for that $194,000 increase, there's corresponding revenue to offset that as well. So there's still, an increased cost in legal services. It's not, overall net, it's not nearly as high as it looks like in that line that I'm showing you. But I think the benefit of it is, there's a lot of predictability now in legal. In the past, we would do our best to budget for, what we thought legal expenses were going to be for the upcoming year, but something can always happen that changes that, and it means that, there can be a lot of volatility in that. And under this new agreement that we have with Belfast, our legal expenses are going to be very predictable going forward, which I think is a really positive thing. Another driver behind expenditures is emergency medical services. So we're budgeting more money so that our on-call firefighters as well as our career firefighters can start responding to emergency services calls. We're hoping that this will lead to a better level of service and more responsiveness. We talked a little bit about the streetlights, so there's a decrease in that line, and that's a result of us acquiring the streetlights from CMP. We're no longer paying the lease fee, so it's going to be a much decreased cost to the town. We're seeing, about $15,000 to round up in savings this year. Moving forward, it'll result in about $35,000 in savings on a yearly basis once the project is paid for. major decrease is the Cemetery Association. I'm proposing that in the past, what the town used to do was pay for money to sort of augment the Cemetery Association's trust fund. However, we have a much better picture of the health of that trust fund at this stage. It's generating about $120,000 worth of revenue a year, so it's really not necessary for the town to augment it anymore. It's gotten to a point where it's so healthy that it can more than cover a lot of the expenses that it was set up to cover.
Sorry.
Oh, sorry.
No, I'll wait for you to be done.
Do you want me to?
Yeah, just.
Okay. So another fairly significant decrease, we're retiring some debt service for capital equipment. So we're seeing a lot of debt, particularly for interest reducing. Capital reserves, I'm proposing that we put a lot less money in capital reserves in this budget than we did last year, or the current financial year that we're in. And then another area, capital improvements. I'm proposing that we do about $455,000 less in capital improvements this year than we did last year. And a lot of that is the strategy to kind of, wait until the debt retires before we do anything major and just focus on planning for this year.
Yeah, so I was wondering, so all those increases and decreases amount to a 1% less in expenditure, correct?
Yes.
Is it a terrible amount of work to have the percentages year over year for each one of those categories, or can I find them somewhere in the budget?
Yes.
Because for me, when you tell me there's a $400,000 increase in wages and overall payroll, it doesn't. Is it a 30% increase or 2% increase? I need the perspective of percentages that helps me understand the mechanics.
So when you do go through sort of the individual departments, you'll get to see sort of, it isn't, you'll get to see what we paid in wages, say for the fire department last year versus this year. And you'll get to see the bottom line for the department, what the increase or decrease was percentage, both dollar amount and percentage wise from last year to this year. What you won't see, but I think that's something that Jody and I could provide if it would be helpful, is what the percentages for just the wages.
Right.
Yeah.
Because they're probably above cost of living adjustment. Your fringe benefits probably increase, and
for some of them, yeah.
There's also steps in there too.
Yes.
Yep.
Yeah. So yeah, it depends on those factors. Like, was there a step increase or, yeah.
Cool. Thank you.
Of course.
Can I ask, so where are you with the wastewater project? Because that's going to fall about that 23, 25, right? Isn't it 4 years out?
That's in the wastewater budget.
I know. So you really think you're going to be able to pay for a $13 million bond with just users fees?
Mm-hmm.
Okay. Do they know it yet?
They do.
Okay.
They will.
They will.
They will. All right, so revenues, to sort of go on the other side of it. So we're looking at about $100,000 increase in revenue sharing, and so last year we didn't budget for an increase in revenue sharing because at the time that the budget was prepared, the state hadn't prepared their budget, so we didn't know. Oh, and sorry, to give you an idea, for those of you who don't know, revenue sharing is the money that the state gives back to the towns from sales tax. So at the time the state was preparing their budget last year, we didn't know what their plans were for revenue sharing, so we had no idea what to budget for, so I just kept that line flat. But last financial year, we received an additional $100,000 from revenue sharing for the state. So I'm just going to assume at this point in time it's going to be, they're talking about it being greater this year than what it was last year, but I'm just going to assume again it's going to be flat with what we got last year. So either way, that's a $100,000 increase. Cable TV franchise fees. Last year we were sort of preparing for a significant decrease again because of changes in FCC rulemaking. Those changes don't seem to have come to fruition, so I'm just going to assume that we're going to be back to where we were in prior financial years. So that's a $15,000 increase. Cemetery maintenance, we're proposing, $10,000 increase in that, and that's revenue that comes from the cemetery trust fund. And that would be us requesting more money for things like, increasing salaries and equipment. Bookkeeping from Midco Solid Waste. So Jody, in addition to being our finance director, is also the bookkeeper for the Midco Solid Waste Corporation. And, that's really in recognition of the fact that, that's the value of the work she does for the corporation.
So is it $23,000 now a year?
Yes.
Okay.
Yep. It's in the budget. They approved it. So, and we were talking with the town attorney and how that's being funded. So this $147,000 in revenue, that's from the city of Belfast reimbursing us for the cost of the attorney. Insurance dividends, so these are paid out by our workers' comp insurance provider when we are able to reduce our losses and come in under our premium. And so we're, receiving about $30,000 worth of dividends because our safety committee's done a great job in reducing our losses. Also, when we're looking at sort of decreases in revenue, we're proposing to use about $23,000 less from our reserve accounts than we used last year. We're going to be using or doing more financing this year because of the purchase of a major piece of capital equipment. That would be the new snowplow, as well as we're going to be splitting the cost of purchasing a mini excavator with the wastewater department. So if you look at the financing around both of those pieces of equipment, we'll be borrowing more money than we did last year. And another decrease in revenues will be, sorry, I don't think I got to the big one, but anyway, another major decrease will be in the use of TIF proceeds. So we used quite a bit of our downtown tax increment financing money last year, and we won't be this year. A big one, and I think it just got cut off in the slide, is I'm proposing that we use less surplus than last year. So last year we used about $950,000 from surplus. We haven't actually spent all of it, but the idea was that we would be borrowing from ourselves to do a couple of major capital projects. So one of them was repairs to the West Dam. Now the actual cost of the repairs came in far below what we had budgeted. So that's good news. We didn't need to use all of that money out of surplus, but we're still going to continue to pay ourselves back. And the other thing that we are borrowing from ourselves for is to pay for the improvements to Pearl Street that we're going to be making in the upcoming year.
So when we borrow from ourselves, we borrow from the general fund?
Yes.
And we don't pay an interest on this, or do we?
We do not.
We do not. And when we borrow outside of our budget, do we have an RF? Is there what's the process, or is it something that's going to come in the later session?
Actually, no, that's all outside, so that's a really good question. So what we do is we usually go out to it's kind of an RFP. We do sort of
I was going to ask if you do an RFP and then or a tender or some sort. And so anybody can bid, any commercial bank, private bank?
Yeah.
There's no like federal credit union that gives you a special rate? Or
well, there is the Maine Municipal Bond Bank.
Right.
So sometimes their rates are really competitive and their terms are really competitive, and we have a lot of bonds through them.
And the debt service we're paying, I'm going to assume, has different interest rates?
Yes.
And can we refinance? And do we refinance?
I don't think with the bond bank we can.
No,
We can't, because it's issued at.
and there's no early prepayments, or you can't pay off a bond.
But with the loans we can. We do have a few loans. Yeah. And if you're actually interested in digging into that, in your binder, there's a spreadsheet that has all of the different. So you can go like real into detail on that.
Thank you.
All right, does anybody else have any questions on any of that? That's just sort of the broad overview. We'll get way more into detail as we go through all of this. No? John?
Oh, I have many, but I'll wait. One question though, when you mentioned the highway equipment.
Yes.
And did you look at purchase finance from the manufacturer? You said you had bond. So you
Oh, I mean, we wait until we know whether or not we're going to get approval for it before we actually look at exactly what we're going to do for
But you may not
financing.
bond, you might do a.
Lease
When
purchase.
we bought the fire truck, we bought it through.
Yeah.
Oshkosh, and it was a good rate.
I mean, it's much more likely for something like that it'll be a lease purchase.
Yeah, uses 5 to 7 years.
I go out and just get a ballpark of what we're gonna be looking at for a 10 to a 15, sometimes 7-year, depending on what the equipment is and how much it is.
So what are you anticipating the price of that public works truck?
The plow truck,
250, 300,
220.
220?
Yep.
Same one as was been bought 4 years ago?
Yes.
Yes.
I kept on promising
Yeah.
that it would be this year because there's another one falling off.
Oh, yeah.
The town puts out for bid many things, and do you put out for bid engineering?
It depends on what the project is and how big the project is. So, trying to think of one where we did put it out recently.
We did some civil.
Yeah.
Some civil out.
You did?
Yeah.
Which is,
Some civil engineering.
Civil.
Yeah.
okay.
We did some civil.
So I think this is a really good example because we're asking for like $200,000 worth of engineering funding for this year. We would definitely be putting that out to bid.
So which streets are you planning on doing this major investment in?
The ones how about I let Dave St. Laurent answer that? Mechanic is definitely one of them that we're thinking.
And that needs sewer done too, right?
Yes. Yep.
Yeah, when she says streets, we're talking about drainage.
Well, I know, but a lot of them usually tie in with the water company and
Yep.
the sewer department at the same time.
Complete streets.
Yeah.
Including sidewalks?
Sidewalks, absolutely.
Right, that's what always was the policy.
Yes. I mean, in fact, I think there's a few where that's kind of the driver, the majority of them, that's sort of the driver for the project is the sidewalks or the pedestrian
And
connectivity.
I gotta ask, where are we with the sidewalk going up Washington Street?
We are negotiating the final easement with the final property owner.
You realize that is probably 35 years old, 40 years old, that project?
I've heard that
Originally started by the planning board.
just the funding
about 40
piece
years.
of it alone is like 11 years old,
Right.
so.
How about the one up on the one?
So, I mean, those are tied together, their fates are tied together now.
Oh, they are
'cause,
together
Yeah, they're gonna
now?
be bid out together
Okay.
as a package, with the hope that the price can be
Yeah.
a little better.
Another question. Any expenditure in the budget that could be financed through grants?
So typically what we put in the budget is, what we could match for, like,
With your revenues in terms
Yeah.
of tax and
right, so we'd use it as like matching fund to go out for a grant. So there's some, what's a good example? We put I proposed to put like 30,000 in for river restoration. And that's a good example of money that could be used to match, like, the National Fish and Wildlife Service or the Maine Coastal Program to do a grant-funded project.
So you don't forecast grants, or is that on a separate, or projects that could be financed by grants?
So when
They're
we're
like
doing
extra budgetary.
yeah, it's kind of like you'll see in the capital plan. I think they might be highlighted in yellow. It's another big spreadsheet. So if you go through and look, I think that they're highlighted in yellow, and it says it's like a project where there's an opportunity to leverage funding, for grant funding for the projects. And we did last year. We had one in the budget. It was for the culvert replacement at the Snow Bowl, and so we budgeted $65,000 for that project, but we already had a $95,000 grant from the DEP to do it. So there are a few where it can be tricky because we want to make sure that the timing is right. So it's either if we're putting it in the budget, we know we're going to get the funding, or we know there's a really good likelihood that we're going to. But we don't put the actual grant in the budget.
Until you secured it, you can't.
It's more like the match we'll put there.
Right, and the opportunity to fund some other project.
Yes.
Yep.
Some of the projects that you're talking about have actually been budgeted in previous years, and those funds are tucked away and waiting for when they actually get done, like the sidewalks that John mentioned and the culvert out at the Snow Bowl. They have been planned and budgeted in previous years.
Yes, yep. And that's something too, you know, I got some really good feedback from some budget committee members in prior years that sometimes it's difficult because we talk a lot about, you know, a particular project or a piece of equipment, and then you don't hear about it ever again. So, I mean, if any of you who've been here before or, you know, just have heard about something that we're doing, have any questions about projects from previous years and the status of them or a piece of equipment or whatever the case may be, you know, we're more than happy to talk about that. And that's all perfectly reasonable thing to ask about and follow up on. Because it's good to know what happens with a decision that you've made in the past and how that impacts, you know, the current year that we're discussing. All right, so my next little spiel is just kind of about, you know, wages and benefits, because this is, you know, a big ticket line that you're going to see in every single section of the budget that we discuss, with the exception of some of the capital stuff. So in regards to, you know, employee benefits and wages and that sort of thing, the way that, you know, the decision-making authority around that happens is the, you know, the personnel policy identifies, you know, insurance and retirement benefits offered to employees. And then, you know, like we were talking about before, when it comes to the police department, that's all dealt with through the collective bargaining agreement that's negotiated between the police union and the town. The select board has the authority to review levels of employee contributions to health insurance and also choose the town's insurance carrier. So if you're looking at the, you know, sort of overall impact on the budget of, you know, health insurance, retirement, other benefits, wages, for health insurance alone, it's about 11%, retirement, you know, 3.24%, FICA Medicare, 2.6%, and overall wages, that's 34% of the overall budget. So the health insurance that we offer, we have 3 choices of plans, and it's through the Maine Municipal Employees Health Trust. And it's kind of, it can be a little bit different depending on when your employment with the town started. So any full-time eligible employees that were hired before 2007, 100% of the cost of their insurance and their families are paid for by the town. And employees that are full-time eligible after 2007, the town pays 100% of the cost of their health insurance and then 80% for their families. So part-time employees, they also can receive health insurance coverage through the town, but it's at 100% of their expense.
How many are left from the 2007-4?
Oh, I knew you'd ask that.
I mean, the grandfathered.
Yes, how many actually left? Because quite a few people retired.
Yeah, we probably,
About 20 or less, probably?
I would say, yeah, less than 20.
It's about 50 altogether employees, right? 50 something.
For
Yeah,
full-time. All right, so we also, group life insurance is also offered at no cost to the employee. That's all part of the health insurance benefit as well. The town offers a choice of retirement plans. One is through the Maine Public Employees Retirement System, and then the other one is through ICMA. And we do offer the opportunity to sign up for vision, dental, income protection, and all kinds of supplemental insurance, but 100% of the cost of that for the premium is paid for by the employee, and it's just a payroll deduction. And so the 3 plans, typically most employees in the town choose the comprehensive point of service plan, and it provides the highest level of coverage. It's the highest cost plan because of the coverage that it provides. And I think one thing to note about the higher cost plans, they have seen less fluctuation in their year-to-year premiums than some of the lower cost plans. So Maine Municipal Employees Health Trust, it's a not-for-profit, it's a self-funded group health insurance trust. So, you know, it's regulated by the Maine Bureau of Insurance, and if you're a municipal employee or you work for some sort of organization that's affiliated, Midcoast Solid Waste is a good example, you're eligible to be part of the trust. So it's, you know, it is self-funded, so it works with a third-party administrator to pay out claims, and it has financial responsibility for ensuring that claims are paid out. And so, you know, there's sort of like different, you know, ways that it's structured around how many employees that you have and, you know, the liability around that. So, you know, the insurance, the vision life, all of that, it's fully insured, and you know, the employer and the trust, they purchase this policy from an insurance company. They're not self-funding those. So the health trust sets rates by like the same way any other insurance company would, but they're doing it on their own by, you know, working with a actuarial firm to, you know, review claims and project what their losses are going to be, and you know, use sort of a bunch of different factors to make adjustments and set the premium. They've done a really, really good job over the years. This sort of, apologies for not getting more updated data, but you know, there's been less sort of fluctuation with you know, sort of the rates and the sort of the year-to-year premiums than you'll see in a lot of other different insurance programs. So that just sort of gives you an idea of where they're at. And like I said, the POSC, there's been a lot less fluctuation than some of the lower cost plans. So just to give you an idea, you know, we asked back a few years ago, can you give us an idea of sort of like your rates and the fluctuations around health insurance premiums with Maine Municipal Health Trust as opposed to some municipalities who have gone with other insurance providers. And so this just gives you an idea of what they've seen in premium fluctuations. So I think that's one of the reasons why the town has stayed with Maine Municipal Employees Health Trust for all these years. It's been, you know, we can basically predict what the premium increase is going to be from year to year. There's not a lot of variability because we're pooled with almost all the other municipalities in Maine. We've got that sort of ability to manage our risk versus if it were just our 54 full-time employees. You know, one person gets really, really sick and that could have a major impact on everybody else's premium. So, you know, this has been a good way of keeping our, you know, our premiums and, you know, the cost very predictable and stable for the town. So that's pretty much that whole spiel, is that, you know, it's worked really well for us if the goal is to make sure that we're able to kind of keep our costs steady from a year-to-year basis.
I'm curious, have you looked into self-insuring? We only have look at that at the very, like 2 years ago when Jody and I started.
Yeah, it was more, it was kind of a la carte, and it kind of resulted in more backroom work and health savings accounts and such. And we realized that staying with a health trust and having that, the protection from fluctuation from year to year was more.
You had more uncertainty on self-insuring them. Thank you.
Yeah, and the city of Bangor, they were a good example of a municipality that did move to that, and they saved a lot of money in premiums from the first year, but then it just became so complicated they had to hire a person to sort of administer that program. So what they said when they looked at the overall savings, they actually didn't end up saving that much money for the city. So, you know, it's kind of, you know, there's trade benefits and you know, sort of trade-offs to each of them. So, you know, I guess my whole overview of employee benefits, it's been really, really important recruiting tool for the town. I was able to, you know, recruit an employee from the city of Bangor. I could not match them in terms of salary, but when you looked at the benefits that they got, it made it worthwhile for them. So that was really powerful to be able to do that. Same thing with the new public works director I hired. I couldn't compete on salary, but I could compete on benefits. So it's been just a marvelous recruiting tool for the town of Camden. It's helped us retain a lot of long-term excellent staff people. We're experiencing a labor shortage. It's a big problem in all industries, local government, it's the same. It's a lot of people who are aging out of the workforce, and we're trying to sort of keep up with, as those employees age out, trying to recruit, younger people into local government, and good benefits have been a really, key thing in being able to attract and retain people. And also, it's given, Camden really does have a reputation as being a really good employer. And I think you need only look around and see, employees that have been here for, Rick Seibel, how many years? Almost 38?
Yeah, almost 40, Marlene 30, Janice.
Randy Gagney's done his 30 years with the town. And, I think a lot of that is by being such a great employer and treating them well.
I was here for 21.
Oh, wow.
Yeah, and then I retired. Well, I retired and then started my own business, but I stayed 21 years because it was a great place to work.
Yeah.
And so yeah.
So yeah, I think it's just really, really important, and I like to talk to the budget committee about it before we do deliberations, because you're always going to see wages and benefits, and I think it's really important to know that behind those numbers there are people, and good people that we want to retain.
Paying too.
Huh?
There are good people paying that too. The taxes,
Absolutely.
I remember one year we had a $50,000 increase in the benefit line because it wasn't a different policy at the time. And people were coming to the board and saying, they don't even have insurance. It was tough.
It is. It is. Yes. So does anybody have any questions about anything we went over tonight? Because that's pretty much it for the organizational meeting.
So I just had a question. I was wondering, did you go into the budget process and have probably received feedback from people all year regarding their property taxes and all? Do you kind of have, I know when I was in Lincolnville, there was often a goal, a target that you tried to hit, like keep it within a certain percentage increase?
When
Do you guys go into this process with that in mind, that you don't want to go above 3% increase?
Yeah, I wanted to keep it below 3%, or at or below 3%. So that was my goal, and my budget ended up being at 2.7.
Okay.
So that's what I go. Year to year, I like to try to keep it kind of steady. Expenses go up, wages go up, but if we can keep it steady and as minimal as possible, that's the goal.
And then what percentage in overall property taxes, what percentage is the town budget versus the school budget?
So the town, I think last I checked, it was about, was it 34%? And then the school's about 62%, and then the county's the rest.
Okay. And you have no idea what those are yet?
We do know the county.
It's at 1,482,400.
Do we know what the difference is?
How much of an increase is that? 100,000?
Was it about 150,000 maybe? Yeah. Yeah. School at this point, we don't know.
It won't be less.
When is this bond payment's already started?
Yes.
Okay, for the new school?
Yes. Yeah.
Yeah, that's one I thought it did.
So the county budget or the assessment is going up 6.44%.
They do another wage adjustment?
The county, yes.
Yes, that's
Yep.
why.
Yeah.
And so the costs of the new school are already factored into last year's budget? Is that?
Yeah, so last year was the first year that we experienced the increase from the debt service for the new school.
So that's why our taxes were so heavily impacted last year.
Yes, and also I think that there's kind of two factors behind that. There was also a lot of growth in the market last year, so there were a few people whose assessments changed because of the growth in the market. So there's, the expense side of things and then the assessment side of things.
When did we pick up in value this year?
I don't know exactly how much, but it is,
Over 20.
value is increasing, isn't it?
Yeah.
Yes. Yeah. So that's good for, taxes too, that we are seeing growth
I have a
in
question.
assessed value.
Well, how does a typical meeting run? Like, what is it?
So usually it would be, the chair would kind of give an introduction to the different departments we're going over, and then we would sort of go through a department, say the first budget you'll go through is the administration, which is, me and Jody, and we'll just kind of say, this is our budget, these are the major differences from this year to last year. You could ask questions about it, we answer them. And then when everyone's satisfied, you sort of go on to the next department, and it's the same thing.
You don't vote till the end, kind of.
I think, what are it's more of like you'll vote on
I think last year.
general government, public safety.
Yeah, they vote on the different departments. As a whole.
Yeah.
And I think that's done at the last meeting.
Yeah.
Right? Yeah. It's not as we go along, but.
So this new deal you have with Bill, so did you take some of the legal costs out of some of the other departments? Because it used to be like the planning department had quite a legal line.
Oh, yeah, they're all lumped in.
So if I recall, at one time it's like 30,000 just for that. I don't know what it is now. So what did you decrease that to offset?
Oh, yeah, it's all sort of lumped into the,
Well, I know that, but you must have, where he's now an employee, you're not paying him the 30 grand or whatever.
oh, yeah, and of course.
That's what I mean, so there are offsets
Yes.
to show that, okay?
Yes. Any other questions? So like I said before, if any of you, as you're reviewing things and, we have a meeting coming up, if you have a question, please reach out to myself or Jody. We're more than happy to answer them or have a discussion with you about anything that you see in there that you'd like to talk about. All right. Thank you, everyone.
Thank you. What are you looking at? The next one.